Hello and welcome to another episode of the Investing with IBD podcast. It's Justin Nielsen here, your host, and it is July 31st, 2024. We just had a Fed meeting, Powell speaking during the press conference. So a little bit of interesting stuff to talk about because of that. And helping me to do that, as he always does, is Shapiro, portfolio manager and research analyst over at O'Neill Global Advisors. How are you doing, Arusha?
I'm doing well, Justin. I think the big question is, did we get that fall today using
Right, exactly.
right?
So,
I mean, it was pretty close. So
yeah, we'll definitely be chatting about that. I haven't seen what the official volume was for the day, but yeah, we'll chat about that, and we'll also be chatting a little bit about how to get uncorrelated with trend following and how to be on the opposite side of where everyone else is, because a lot of times that contrarian viewpoint can be very profitable. And helping us kind of figure that part out is Jason Shapiro, returning back to the show. Now, of course, Jason originally got on my radar because he was featured in one of the Market Wizards books. He's the founder of crowdedmarketreport.com, which does take a lot of information from, and I'm going to let him do this a little bit better, but takes a lot of information that is out there publicly, puts it in some really nice charts to show where things are getting crowded. So Jason, welcome back to the show. It's great to have you.
Good to be here. Good to see you again.
So just to remind our listeners, for those that maybe didn't see your first appearance, a little bit of what you do on Crowded Market Report, because I think it's just so interesting how you take that data and say, okay, this is where everybody else is. Where do I want to be?
Yeah, I mean, Crowded Market Report came into being because I was in that Jack Schwager book, and a lot of people sort of were contacting me, asking if I could show them how I do what I do or whatever. And while I like to do that, I had help when I started, and I want to pass that along. It just got to be where there were so many people asking me. I was like, I don't know how I can do this. And one of the people said, well, why don't I start a web page? You could centralize it. So that's what we did. And so in there, we talk a lot about, what I do, first of all, and how I approach the markets, which is trying to take a contrarian view and what that means. I think that it's very important. I have found that being contrarian does not really mean being contrarian price. Being contrarian the price of something, saying, hey, this is going up, so therefore I'm going to try and short it, or this is going down, therefore I'm going to buy it. That's fighting the tape, and that will get you run over time. So I like to be contrarian positioning. So it's not, hey, this thing's gone up a lot, so I'm going to try to short it. It's, hey, from what I can tell, everybody is long this thing already, so I'm going to try and look to short it. Or everyone is short this thing, so I'm going to look to buy it. So to find that, part of that puzzle is we look at the commitments of traders data, which is produced every week by the CFTC, comes from all the futures data, where they release where people are in fact positioned in all these different futures markets. And so on crowdedmarketreport.com, we do talk a lot about this, as well as some other things, a lot of trading psychology and all that. And we produce these charts for this commitment of traders data. And you can get commitments of traders data charts anywhere on the internet, really. What I found, or I should say what the guy who started this found, was the charts that I was using, which I didn't like any of the free ones. I was purchasing some charts, and he thought he could do a better job. So he put together charts on the commitments of trader data, which is the charts that we use now. I think that our charts are first of all, we cover every futures market, which most places don't. We also have our charts are very interactive. You can change the dates, make them longer, shorter. You can combine them. You can say, okay, instead of just looking at the S&P, I want to look at all equity indices and see what those are. And you can combine sort of S&P, Dow, NASDAQ, Russell, and put them all kinds of stuff you can do with our charts that I think are much better than anything I've seen out there. So we do. And then we have a weekly newsletter that gets sent out, which really is just what I have done for myself every week for the last, God knows, 25 years. It's really just my notes. Like, here's what I'm looking to trade this week. Here's why. Here's the circumstances in which I'm going to trade it. I put my trades on there. I like to say that Crowded Market Report is not a tip sheet. I don't encourage people to just copy trade what I'm doing type of stuff. If they can go and look at the trades I'm making and look at what happens with it, I lose money, I make money, I take profit, I take loss, and it kind of can help people to see how I deal with that risk management and all that, which they can help them hopefully in their process. I'm very much about people having their own process, because trying to trade my process is going to be very, very difficult for someone else. Just like me trying to trade someone else's process is going to be very, very difficult for someone else. The process has to match your personality, that whole thing, right?
Right.
But the lessons within, no matter what your process is, to me are the same. Discipline, risk management, all that. So people are able to follow. And I know that some people do copy trade what I do, despite what I tell them to do or not to do. But really, the idea is they can follow as I'm going through my trades and my portfolio, how I'm handling these different things, as an example of just another trader that's handling these things in a way that hopefully, we can learn from each other.
Yeah.
So,
and well,
maybe
I will say that having read your analysis, one of the things that I do like about it is that you do put that kind of transparency of, this is what I'm thinking. If it does this, then I'm going to be looking to do this, so you always have those kind of setups. But Arusha, I'm sorry, what were you going to say?
Oh yeah, well maybe Mike can put up the gold chart here.
I was thinking of that. Yeah, just so you can kind of walk through.
Yeah, just seeing, how you analyze this. Maybe just very quickly, Jason, just let the viewers know like how you're analyzing this and what you get out of it.
So the traders in the futures markets are broken down into 3 groups, right?
Yep.
One is commercial traders, which are people that actually have hedging needs, right? And that's the red line on that chart, right? And the rest are speculators, like all of us, right? And there's 2 types of speculators. The blue are large speculators, which is defined as, they call it reportables. So, when you're trading futures, if you go over a certain amount of contracts, you have to report that. So those are the reportables. And everybody else is the yellow line, which I call small speculators. So when picking a market turn, what I'm looking to do is I'm looking for the commercials to be very one-sided, and the speculators to be very the other-sided. So if the speculators are super long, like you see they are here in gold, I now have a window where I can try and short this market. And I won't short it just because of this. This is not any kind of magical indicator or anything like that, right? I like to say it's not necessarily a great predictor of where the market's going to go, but it is a great risk manager, right? It keeps me from shorting something just because it's going up a lot, but it's not crowded, right? It'll keep me from doing that, right? I will only get shorted once it is very crowded, and then I will only really get shorted and put the trade on when I get some market confirmation on top of it. So it's sort of 2 layers of keeping me from myself, from my own stupidity, basically.
And we could all use a little bit of that, save myself from my own.
A lot of that, I think. You know what I mean? We're our biggest enemy. So it's helped me, trying to. There were times earlier in my career where I did what I think a lot of people do, right? Which is, this thing's gone up a lot, and so I'm going to try and short it, right? And even worse, this thing's gone up a lot, and I've totally missed it, so therefore I'm going to try and short it, right?
And make the revenge trade, right?
Yes, and that gets me.
I'll show you for going up without me.
Right. So this really helps me keep that discipline of what I'm trying to do. And the point is, if they're super long, right, and the market starts to fail and go down, right, then we have a lot of people that are going to get stopped out and need to reverse that trade, right?
Yeah.
So therefore, there can be a very big move when this works. So less than half my trades actually work, but I get stopped out very quickly. And when I gain, I tend to get some big chunky gains. So if I can get 4 to 1, 5 to 1, return versus what I'm risking per trade, then over time, that tends to be how I put up my returns.
And maybe you could talk a little bit about another concept that you talked about on your first appearance, the news failure event. When expectations are that a news event will go one way, or that the reaction would be one way, and the market does the opposite. Why is that important to you?
Well, that is what triggers a trade for me. This kind of data opens up a window for me to make a trade, But now
Creates an environment I like to think of.
yeah,
I mean,
right.
it's almost like setting up a base, like for our
Yeah.
language, right? The bases are setting up, and we're waiting for that signal. At that
Right, you're
point,
waiting
right?
for the breakout.
Right, exactly.
So I'm waiting for which is your confirmation, right?
Yes. Yep.
Mhm.
As a trend momentum trader, a breakout is your confirmation.
Yep.
My confirmation is the market does not go up when it should. I call it news failure, right? So let's say I'm looking to get long or short gold here because I think this is super crowded, right?
Mhm.
So what is driving gold higher, right? What is the news stuff that's driving gold higher? Arguably, the expectation for lower interest rates, right? Which leads to the expectation for lower dollar, which leads to the expectation of higher gold. So if something like that were to happen, like today, I would say that happened, right? The Fed was somewhat, I would call, dovish, arguably.
Mhm.
Interest rates did in fact go down. The dollar went down, as should be, and gold went up. So there's no trade for me. Had gold gone up on all that news and then closed down while these other things were still in place, while rates were still lower, while the dollar was still lower and all that, I would have shorted gold versus today's high, right? And it's almost like, it's like a classic sort of buy the news, buy the rumor, sell the news type of thing, right?
Right.
The news comes out, the market doesn't go up anymore, right? That's where I'm looking to get short. That's my trigger.
So we're showing the GLD on Market Surge right now. Yeah, and it finished right at the top of the range. So even though the setup's there, you didn't get the signal from gold because it didn't reverse as from the news event.
Listen, sometimes I sit here for months.
Yeah.
Set up to go, and until I get my market confirmation, I don't do it.
So that does require a certain amount of patience. And if I remember correctly, I think I read, didn't you spend some time in a Buddhist monastery for a while?
I did.
Yeah. How long was that? Is that where you think your patience comes from?
About a month.
A month.
No,
Okay.
I don't think that's where my patience comes from necessarily. I think my patience, everything that I do in trading, at least, I think comes from the fact that I just got sick of losing money at a certain point, and I started learning, and keeping tabs of where I was losing money, and trying to eliminate those mistakes,
Mhm.
and not being patient is certainly one of those mistakes, right?
Mhm.
So I tend to be I try to be very, very patient and wait for the market to tell me when, and we have people, for example, on my service and on my Discord, and they have seen some of these trades work very well. And then suddenly they start wanting to jump the gun, as soon as the community trader stuff is showing stuff, showing things very crowded, they're looking to jump the gun. I'm like, listen, man, I'm just telling you, you know what I mean? I'm just telling you, these things can go. Look, sometimes it happens very quickly, and that's great. Sometimes it goes months before it happens, right? And it's like you have to be patient. That's the key to one of the keys to the whole game, especially when you're picking market turns. Market turns don't happen every day,
Right. Yeah. Very important. Let's talk a little bit about the current market. As you mentioned, the Fed kind of adopted a little bit more of, along with expectations. Hey, yeah, September is, possible, kind of teed up, if you will, that for a September rate cut cycle to begin. There's certainly a lot of data that Jerome Powell was saying still needs to come. He's referring to not just the focus on the inflation data, but also the labor market coming a little bit more into focus as well. Does any of this macroeconomic news or noise come into your calculus here for deciding how to play things?
For my actual trading, not really.
Mm-hmm.
I do pay a lot of attention to it. I love talking about it. I find it extremely interesting, right? But the only place it really comes into my thinking or in my trading is that I'm trying to figure out what the expectations are for what things make something bullish or what makes something bearish. So therefore I can capture that news failure, right? So I need to kind of get a good grip on that in order to figure out what is a news failure, right? Is a rate cut bullish or bearish at this point? I don't even know, to tell you the truth. I don't have to worry about it because I don't have any setups in the stock market anyway, right? So I don't have to necessarily worry about it.
Becomes a moot point.
But from a currency perspective or a bond perspective, of currencies in particular, these metals where I do have some setups, I kind of need to know that. So I do pay attention to it. And I do spend a lot of time talking and thinking about the macro just because, one, I think it just gets it off my chest. I love it. I love I think it's very interesting. I think macroeconomics, I think the whole macro picture is very interesting. I don't want to trade off it because I think it's a mistake. But I talk about it a lot and I write about it a lot in my report sometime, every week because it gets it off my chest. Here you go. It's interesting. You want to talk about it, get it out of the way, and now trade what you're supposed to trade,
Yep.
And I get a great chance of then going back. I've been writing this report for 20 something years, right? At the end of the year, I always go back and read my reports and see, hey, did I get this right? Did I get this wrong? And it really can dig in my head like, hey, sometimes you get it right and sometimes you don't get it right. So that ain't good enough to trade off of,
Yeah.
We're going to take a quick minute and just pull up some charts here on the general market index because we do want to kind of, put this in kind of the IBD perspective. So maybe, Arusha, if you throw up the NASDAQ composite, NASDAQ composite, of course, was up 2.6% today. Again, this all started before the Fed announcement. It was, kind of already moving, and a lot of the AI type plays, NVIDIA, that was up what, 12%,
12%, yeah,
almost 13%. A strong move there, still below the 50-day moving average line, right, by the way, for both the NASDAQ and NVIDIA, although the NASDAQ, I think, got right. Oh, I'm sorry. The NASDAQ did end up closing just above the 50-day moving average line. So not a follow-through day here
for the NASDAQ,
because if you were doing your counting, the 25th was not a day one. It was a down day. Your day one would have been the 26th, but then you undercut the lows yesterday. So that kind of reset that for the NASDAQ. So this is just day one of a rally attempt on the NASDAQ. Over on the S&P 500, however, that low of the 25th did remain intact. So this would be, if you counted the 26th as your day one rally, this would be your fourth day. And it looks like volume is coming in heavier. So that's your follow through day on the S&P 500. It's worth mentioning that the Russell 2000 didn't need a follow through day, right? You've had the Russell 2000 acting much, much stronger. So Jason, maybe you could talk a little bit about this kind of shift. Everyone was kind of on the tech side, the AI side, and small caps had really been kind of ignored for a while. And then it really seemed to flip the switch on July 11th with a CPI report. And all of a sudden it was all about, the 10-year treasury yields coming down, the Russell 2000 small caps going up, mid caps going up. If you look at MDY, that's the S&P 400 mid cap index. That's looked a lot stronger. And even RSP, which is the equal weighted S&P 500, has also vastly improved. And you can see a lot of that in the relative strength lines. Anything that you are seeing kind of in your data on the future side that kind of was telling you something about this shift?
In the first week of July, we really haven't had a crowded trade in the stock indices for most of this year, right? And then in the first week of July, the commitments of traders data came out, and we saw that suddenly the positioning in the Russell was showing speculators maximum short.
Okay.
Which makes me believe that the Russell, at the very least, will outperform. And it took a week, but it sure did for the month of July, So the commitments of traders really kind of nailed that one, I would say. Doesn't nail them all, but it definitely nailed that one.
And as you said before, it doesn't need to nail them all, right? It just has to do better the times it's right than the times it's wrong.
That's right. So That's right. But it did really nail this one. And it's not like it was saying buy Russell this whole year as it was underperforming. Literally, this data didn't show until the first week of July.
That's wild.
Mm-hmm.
That's so interesting.
You know, and you know, there's so many ways to use this data anyway, right? You don't necessarily, depending on what you do, right? If you were a long only investor, you know, at that point, you could probably say, hey, maybe I should lean more towards Russell. I mean, I can tell you that in my long only portfolio, my retirement portfolio, I increased my Russell weight that week by a lot, right? Just because of that, right? So it can help like with that as well. There's so many ways with this data. You don't have to like use it just to trade how I trade, you know?
Yeah.
There's a lot of different ways to use this data that can really give you an edge over time.
Yeah. And I will also say this is something that, you know, Mike Webster and I did a webinar yesterday for Swing Trader, and Mike Webster was just a guest on one of your podcasts, right, Jason?
I interview people like once a month or so, and he was our interview last month. Yeah.
Yeah. So that's definitely where can people find that?
On YouTube.
Mm-hmm.
Just look at
if they just
Crowded
go to
Market Report on YouTube.
Right. So that's
or
definitely
on Twitter. We posted on Twitter too. You know?
Yeah, that's definitely worth checking out. But one of the things we were talking about is just kind of this this disparity, I guess, this divergence, this you know, huge outperformance of the Russell versus the S&P 500, the NASDAQ especially. Kind of, you have to go back to like 2000, 2001, January, February 2001 to see a similar level of outperformance of the Russell versus the NASDAQ composite. And that was kind of an unusual situation because you had the NASDAQ down so much, and, you know, because of the .com bubble, and it was just that the Russell wasn't down as much. Another area that kind of stuck out with, you know, some of the outperformance of, let's say, an RSP, the equal weighted S&P 500 versus the S&P 500 market cap weighted, was an outperformance level that hadn't been seen since April 2009, which of course was that was right after the great financial crisis.
To buy the market, April 2009.
What's that?
It was a pretty good time to get long the stock market, April
2009.
Yes. And especially, I will say that, you know, just as memory serves, growth did take a little bit of time to come back after the great financial crisis. What really led for the first few months after our March follow-through day was a lot of things coming off the bottom. You have Bank of America that was, you know, down to single digits, Ford down to single digits, Citigroup, that had to do a reverse split so it didn't get delisted from the New York Stock Exchange. And then, of course, there were the things that you could no longer trade, like Lehman Brothers, Bear Stearns, you know, Morgan, you know, Merrill Lynch, you know, got bought. A number of banks went away, you know, so it was kind of a very, very interesting time period. But any other thoughts kind of on this this market right now in terms of, because we are going to get to some of the currencies a little bit later in the show, but any kind of final thoughts on the market before we move on?
You know, my feeling about this market is that it's a bull market. Let's just keep it nice and simple. You know what I mean? Mm-hmm. And bull markets have down days and down weeks and down months and even down quarters. But to me, this is a bull market. Mm-hmm. So if that's right, then you want to be erring to trading from the long side rather than the short side in a bull market. I think it's really that simple. What's going to change it from being a bull market to a bear market? You know, we'll have to see, you know, different reactions and different psychology and different data and all that. But nothing tells me right now that we are in anything except a bull market, you know. Mm-hmm. I mean, you talked about yesterday and the NASDAQ and all that. Yesterday, if you look at the chart of the NASDAQ futures, you know, the NQs, as of yesterday, they looked horrendous. It looked like they were breaking down, and we were on the you know, the edge of hell, right? And I feel like if it were a bear market, then that would follow through, right? In a bull market, those type of horrible charts do not follow through to the downside, right? I think these are all kind of examples of why I think this continues to be a bull market. You know, the Russell hit not a new all-time high, but a new year high today at one point. The S&P, look, everyone, it feels like things have gotten destroyed over the last month, right? And NVIDIA down 20% or whatever at one point, and this and that. the S&P's down like 2.5% off its all-time high. Like, well, I don't know what everybody's getting so excited about. You know, like, 2.5% of its all-time high that nobody thought would ever get here anyway, right?
Yeah.
So, you know, I'm not saying it's going straight back to highs. I don't know, but you know, the truth is, 2 days like today, and we're at all-time highs, right?
Yeah.
So, you know, I think it's a bull market. That would be my comment. And obviously, in a bull market, you want to be erring to the long side.
Yeah, it's also worth mentioning that the S&P 500 did get above kind of a level of, you know, that could have been looked at as resistance potentially at 5,500. Also, that got above its 21-day moving average line, and it really didn't dip too much below the 50-day moving average line. So, any kind of final thoughts on the market from you, Arusha?
No, I mean now that we've had that fall today, just follow the rules. And look for stocks that are setting up and take a shot at a couple of them to get feedback, more importantly, right? You don't have to go too aggressive, but get feedback to see if some of those trades are working, because if they start working, that's going to give you more confidence to get pulled more into the market when the time is right. Yeah.
Really, I think this is one of the things that comes out a lot from this podcast is it's important to have a set of rules. And follow your rules, no matter what your feelings on them are sometimes, because your feelings can really lead you astray. We're going to take a quick break, and when we come back, we're going to talk a little bit more about the rules that Jason employs and how his patients got to extremes earlier this year. Stay tuned. We'll be right back. We're back on the Investing with IBD podcast. Justin Nielsen here, along with Arusha Pierce from O'Neill Global Advisors. And our special guest this week is Jason Shapiro, coming back to the show from crowdedmarketreport.com. He's the founder over there and does some great analysis, especially on the future side, using data, you know, from the commitments of traders that's available from the futures market. Let's talk a little bit about this concept of patience and waiting for the trade to kind of present itself rather than trying to just do something for the sake of doing something.
Well, actually, maybe Justin, we should we should set it up where Jason didn't even make one trade for 3 months, right?
Yeah.
Which is
talk about that, Jason.
Amazing.
I mean, because again, that's I think the ultimate in patience, not. You know, and that was unusual, right? That's not something that has ever happened in your trading career, but it did happen this year.
I've been trading my process now for about 24 years. I can't even think of a time where I had no trades on for longer than maybe a week or two. We were not getting any signals the first 3 months of this year. Very, very hard to do. You know?
Yeah.
I manage money for other people, you know, for some institutions, and it's like,
what kind of pressure does that give to you when you're like not?
It doesn't give any. It doesn't give any because, truthfully, I'm at a point now after God knows how many years where the clients that I have understand what I do, understand what it is that I do for their portfolio, and that's why they hire me, right? I also do not charge people management fee. So I'm not 2 and 20. I'm like 0 and 30, right?
Yeah.
And there's reasons for that. This being one of them, you know, I can't, no one's going to come to me and be like, hey, you haven't done anything and I'm paying you, right? Because they're not paying me. I don't get paid unless I make money. And that's one of the reasons that I organized it that way, you know?
So Jason, when did this happen?
It was the first 3 months of this year.
Okay.
Or it was really like December, January, February, that type of thing.
Okay, and that's when a lot of large cap stocks were kept working, and I think
this is when all trends were working. You know,
If you, even the Russell, Russell was moving at that point, right? In the
everything
kind of the early part.
Yeah. So you know, if you think about it in terms of at least what I do, you know, I'm offering a non-correlated and sometimes negatively correlated return stream to people who are looking to put together a portfolio.
Yep.
So the idea is when most people are losing money, I should make a bunch of money. And when most people are making money, hopefully I don't lose too much, right? If they make 10 and I lose 10, and then they lose 10 and I make 10, that doesn't get anybody anywhere, right?
Yes.
They make 10 and I lose 2, and then they lose 10 and I make 10, now we're getting somewhere, right?
Yep.
And that's where sort of the 0 to slightly negative correlation comes in, right? So during that time period, trend following was crushing it. It was one of the greatest periods for trend following that we've seen in a while, in a few years, right? So wasn't getting any trades, so I wasn't losing any money. So I was flat while they were killing it, right?
Yeah.
And then the last few months, we've had a really good run on my stuff while trend following has given back. So, that's why I think I'm able to a little bit, and I'm not perfect at this, believe me, okay? But I'm able to keep my discipline pretty well because I feel pretty confident that my process will create over time the return stream that I am telling my clients it will create, right?
Mm-hmm.
It's not necessarily about, and this is why I tell people you shouldn't necessarily copy trade me, because my goals are maybe different than yours. Your goals are to maximize your P&L at all times, right? My goal is, yes, to maximize my P&L versus drawdown, but at the same time to do so in a way that has no correlation or negative correlation to other return streams, right? So that's a third sort of constraint on that, where you might not have that constraint, right? And the people that are sort of copy trading me or even putting my process to work in a slightly different way, I talk to them about how this should just be a piece of your portfolio. The true way to riches over time is having a portfolio of non-correlated return streams that have positive return expectations, right? Not having one thing, having a portfolio of these things, right? And this is one piece of that portfolio, right? Which is hard to get.
Right.
It's hard to find negative correlation with positive return expectations. And this does that, but I don't put all my money in this, and I would never take a client on that was putting all of their money in this. That's not the idea. My clients are diversified fund of hedge funds that have different return streams in there, and they give me whatever percentage that they think is going to push out the efficient frontier the best for them based on my returns. But anyway, that's kind of the point there. So it helps me with my discipline, knowing that that's what I'm supposed to be doing. That's my job, and my clients certainly didn't when I was flat, for 3 months there, because they were crushing it,
Right.
Well, when I used to raise money and I would market to these people, I used to say to them, I had a marketing guy that would just cringe every time I did this. But I'd say to these people I'm raising money from, I go, here's what you want to happen. You want to give me money, and then you want me to lose money every single month. Because if I lose money every single month, it means everybody else in your portfolio is making money.
Yeah.
Mm-hmm.
Now, that's never going to happen, right? Well, I don't know if it's never going to happen when I lose money every month, but it's never going to happen that all your people are making money every month, right? But just that's the point, right? I used to say it to them because I really wanted to attract capital that understand what they were getting into here. This is a whole nother conversation of when you manage outside money and the nightmares of the clients that you can get in, that when it's a wrong client. It's just like, but it's very similar when you're trading. When you're trading something that's not you, it makes it that much harder, right?
Mm-hmm.
So when clients that were giving me money and not understanding what it is that I'm doing for them, it just makes it that much harder as a relationship. So I was really trying to attract the clients that understood and were getting into my stuff for what I consider to be the right reason.
Mm-hmm.
And during and just very quickly, just during that time, though, all those assets and things that were trending really well in the first 3 months, were they crowded trades at that point, or they weren't crowded trades?
That's the beauty of it. I wasn't getting any trades because there was nothing crowded.
Yeah.
Right? And the fact, I will argue, that there was nothing crowded is why the trends were able to continue and why trend following was making so much money.
Yeah.
Right.
Mm-hmm.
And then once they get crowded, okay, now the trends can reverse. Right.
So interesting.
But not until then. That's how I can't prove that's true, but that's what I believe. And it certainly worked during that time. Right.
Yeah.
Mm-hmm. Yeah. No, that totally makes sense. That, again, it's not until you kind of get to the extremes. And I mean, you can call it what you will. You might say, okay, is that kind of like mean reversion? Things get out of whack and then they come back, to the mean, whether it's on the upside or the downside. One other part
mean
to
reversion of positioning rather than mean reversion of price.
Okay.
Oh, I like that.
So explain that a little bit. Yeah, that's interesting.
Like I was saying before, I'm not shorting something just because the price has gone up a lot.
Yeah.
Right.
Shorting because people have gotten way long. So I'm not mean reverting price, but you could argue I'm mean reverting positioning. They get super long, and then okay, it starts to sell off. They get out, and once they're out, then I'm covering my short, right?
Yep.
So I'm sort of doing mean reversion of positioning rather than price. Mean reversion of positioning, just like a price, just like any price thing that you're fading, I think is extremely dangerous. I never got it. So this thing is 3 standard deviations away from its mean. So I'm going to short it. Okay. What happens when it goes to 4 standard deviations?
Right.
Well, then are you shorting more?
Yeah.
And what happens if it goes to 5 standard? Like that's how you blow out.
Yeah.
Yeah.
As the
I've
folks at
never
long-term
understood
capital
that. I
management.
understand that over time, okay, things will mean revert, but there are it's the exact opposite of what I do. You'll make money mean reverting price more than you'll lose, more times than you'll lose money. But the times that you lose money, you will blow out.
Yeah.
So you won't be around, right? It's the exact opposite of what I do. A higher probability, but horrible payout over time is how I see mean reversion of price.
Mm-hmm. And especially for those kind of black swan events, that's where you get into a position where, you can no longer get more on one side because you just run out of money because you can only be wrong so many times.
And don't get me wrong, markets can turn without them being super crowded. Okay, things happen. Good news comes out, bad news comes out. The market goes up and down. I miss market turns in markets all the time, right? But it's not a question of me trying to get every single market turn. It's a question of me getting the trades that I do take being the market turns, right? So markets do things. This is just one thing that happens that I happen to catch, but markets do other things too that I don't play in. And you know what I mean? Cocoa went straight up and then came down. I didn't catch that turn. It wasn't crowded at the top. I didn't catch it. Okay. So what? There's plenty more there. I trade 37 markets. They move up and down every day. You know what I mean? I have 3 positions on. That means there's 34 markets that I missed something in, right? But that's not the point, right? The point is what I am doing a specific thing, and I just want that specific thing to work when it, So
right. And one more thing on kind of the correlation side of things, because I feel like a lot of people will think that they're diversified and safe when they have a lot of different stocks, and I think that sometimes lulls them into some complacency because they don't realize that, there's kind of the correlation of crisis where when bad things happen, a lot of times, even if you have normally uncorrelated things, they kind of all correlate to one, either for good or for ill, right? In 99, a lot of things were correlating to one on the good side, in the 90s. 2008, a lot of things were correlating to, one on the negative side. But those correlations just get much, much higher. Do you find that your stuff does kind of keep, again, that correlation of crisis a little bit outside of that?
Yeah, I mean, look, my stuff by definition is not going to have correlation because I'm fading something that everybody is long. I'm shorting something and everyone's long. I'm longing something that everyone's short. So again, when I was raising money, I used to say to people, look, I can't guarantee you I'm going to make you money. It's illegal, first of all. And second of all, it's disingenuous. But I can come pretty darn close to guarantee you I'm not going to be correlated to anything in your portfolio, right? This whole thing about, they have different stocks. They think they're diversified is silly. I watch Jim Cramer once in a while, and he does that little segment, Are You Diversified? And the guy would be like, he'll give him like his list of like 5 stocks. And he goes, all right, you got a tech company, an industrial, a gold mining stock, a bank. You're diversified. That's not what diversified is. Run numbers and see what the correlations are between these things, with the hope that those correlations will continue, obviously, which they may or may not. Like you say, they may all go to 1 at some point, but that's at least a starting point for deciding what is actually diversified, right?
Yeah.
Just saying you have, a bank and a tech company and that doesn't mean jack. And I'm not ripping into Jim Cramer. His audience is a certain audience that he's appealing to. You know what I mean? He's not going to get into the mathematics and statistics behind correlations of a portfolio, because the people turn off the TV and they're not going to listen to that.
Yeah, statistics is not as exciting as
Right. Right.
But it
Yeah,
does
and we
remind me.
found that in the bear markets, right, where
Mhm.
all those stocks will go down, right? But
Mhm.
they'll all.
No, I mean, clearly, how did your diversified portfolio of stocks do in 2008?
Exactly.
Right,
Exactly.
yeah.
It
Right.
didn't help you one bit, and that's when it needs to help you. That tends to be
Exactly.
the thing, right? When you need it most,
Yeah.
Yeah.
is when it helps you the least, right?
Mhm. And again, sometimes you get lulled into that complacency because when everything is going great, you don't think about that downside. And
Right.
and also kind of on that diversification side, I think of a lot of times where there was one point in time where I was going out and speaking and someone was talking about their portfolio, and they gave me like, oh, here's a telecom company that I have, here's a metals company that I have, here's a tech company that I have, and a real estate company that I have, but they were all Chinese. I was like, that's not correlated. Something happens bad on the Chinese market, and they're all going down. And
If you're going to be honest about it, which gets to your point, Arisha, I think if you're sitting on this portfolio and the market's going up and all of your stocks are going up, then you're not diversified.
Right.
Right? If you're going to be honest about it,
It's so
right?
true. You're absolutely right. Yeah.
You should say to yourself, something's wrong here. I mean,
Yeah.
it's great. I'm making money, right? But the truth is, what happens when it goes down? If they're all going up while the market's going up, then there's a pretty damn good chance that they're all going to go down when the market goes down, right?
Exactly.
So that ain't diversified. Ride it if that's what you want to do, but
Right.
don't tell me you're diversified, right?
Yeah.
Understand what you've got. And I think a lot of times, again, that complacency comes from the fact that people kind of attribute that to their just great stock picking. Oh, I'm just good at this. That's why it's all going up. Not that you've got correlated assets necessarily. So, yeah.
It's bull markets, right? Everyone's a genius in a bull market.
Absolutely.
Right, exactly. Hey, look, I started investing in the
Except the
90s, and I
perma-bears.
thought I was absolutely untouchable.
Sure,
for
everyone's a genius in a bull market except the perma bears.
yeah, right. Yeah, so very, very good. Any kind of closing thoughts on the correlation side and the patient side before we get to some of the trades that you find setting up right now?
I think it's essential,
Mhm.
I think it's essential to know what you're doing or know what you're trying to do. And don't tell me I'm trying to make as much money as I can. I get that. All right. It reminds me of when I started playing guitar, and I would get these guitar teachers are like, well, what are you trying to do? I'm like, what do you mean? What am I trying to do? I'm trying to play guitar like Eddie Van Halen. I mean, well, what do you think? I didn't even understand the question, right? Like I didn't know, but now I'm a few years into playing guitar. Now I understand that question, right? What are you trying to do? But I didn't when I started, right? So the answer can't be, what are you trying to do with your trading? Oh, I'm just trying to I'm trying to get rich and retire. Okay, clearly, right? But that's not really the answer, right? You have to know what it is you're trying to do. I'm trying to put together a return stream that's not correlated to my long only portfolio, or I'm trying to juice my long only portfolio, or I'm trying to hedge my long only portfolio, or whatever it is you're trying to do, right? And then, yes, you need to be disciplined to that and disciplined and be patient to that.
Yeah. Well, when we come back, we're going to get a little bit of Jason's thoughts on a few different markets. As he said, there's 37 he's got to choose from. We'll find out which ones are getting his attention. Stay tuned. We'll be right back. We're back, and it's time to get into some stock ideas. Well, not really stock ideas. I shouldn't say that. This is more the futures market, right? And before we do that, Jason, maybe you can tell me why did you go with futures instead of equities? Why is that your concentration?
It's just kind of the way my life went. I've traded a lot of equities in my day, in my life, but it just kind of went that way. And then I got onto this Commitment to Traders thing, and I liked that a lot because it really helped me with trying to do this contrarian type of trading. And then as it turned out, because of that's the way I trade, I didn't know any of this at the time. I was a young kid. But the return stream off of that then became something that people needed because they need this sort of negative return stream, and that's how I built my business. It's just kind of the way that it went. It wasn't a plan by any stretch of the imagination.
Right. And it is, as you said, you've got 37 different things to look at, and sometimes that's enough. More isn't necessarily better.
It's more than enough.
Yeah. So let's go ahead and start with the British pound. And if we could throw up a chart here, this is again is from crowdedmarketreport.com. And as Jason said, you've got your histograms, the red and blue kind of countering each other, the commercials being the red and the large speculators being the blue, and then that smaller yellow histogram being your small speculators. So this certainly seems very, very lopsided, if that's the word.
It's the most lopsided that it's been in, I don't know, 20 years or something like that.
Wow.
But again, here's a couple important points on this. The last time it was this lopsided, it's actually a little less than 20 years. The market went up for another like 6 months.
Okay.
And then stayed lopsided, kept getting more lopsided. And then after 6 months, it collapsed, right? But if you had been shorting it for 6 months, you probably wouldn't have been around for the collapse. So that's A. So I wait for this news failure. Now, some on my Discord argued that there was a news failure in the British pound on the day that it released its CPI, which I believe was on July 18th. Right.
Okay. So you know what I'm going to do? I'm going to go ahead and I'll switch to the price here, because again, this kind of, as you said, sets up the environment that things are lopsided.
Right.
And so I'm going to go ahead and I'm going to share the price now of, and this is just, I'm going to be showing Thinkorswim. This is the British pound futures. So the 18th is
That reversal right there, right? Probably.
Yeah, this first down candle
Correct.
right here.
So that came on a day when some would argue the British CPI came out stronger than expected, and therefore that should be bullish the pound, right? Interest rates in England should go up, pound should go up, and the thing reversed and closed down.
Mm-hmm.
So that is where you would sell it. I didn't read that as the CPI being super bullish, so I did not do that.
Mm-hmm.
Those who did have been making money on it, and I'm happy for them.
Wait, so why didn't you? So why didn't you read it? Was it extreme enough, or
I didn't think that the CPI was really so bullish. I thought it was more kind of in line with expectations.
Okay.
I want it to be obvious, right?
Mm-hmm.
I always say if I have to question, then it's probably not it, right?
Okay. Yep.
Other people have a little looser rules, and that's fine. And those who did have been making money on that trade, so good for them, right?
Mm-hmm.
So for me, though, it's still set up. So I'm waiting for something that gives me that. So like tonight, we have the Bank of England is going to make their interest rate decision and give their interest rate talk and all that.
Yeah.
So I'm hoping that they are super hawkish, which would indicate pound should go up. I'd like to see the pound go up in response to that, and then fail and close down for no reason, and then I can get shorted.
Mm-hmm.
One trade I have set up there.
Mm-hmm. So again, the fact that, which again, I mean, I would look at this and say, oh wow, you kind of had a reversal, a downside reversal here that started, but that price action. Again, is just one component for you. It's again, what is that news? What is the expectation, and how is it going against it? That news failure event that you're
for
saying.
me. And listen, like I said, there's a lot of times where this stuff will be set up, and instead of a piece of good news and the market failing, there'll just be a piece of bad news, and the market will just start going down, and it'll never look back because all these people that are long will start getting stopped all the way down. And if that happens, I miss the trade.
Mm-hmm.
What can I do? I don't lose any money on it. I miss a good opportunity to make money, but again, I'm playing by my rules and I'm trying to follow my rules, right?
That's huge.
Mm-hmm.
Yep.
Because there's a lot of times where a piece of bad news will come out and it will start going down, and then it will reverse and it will go back up and stop me out, right?
Mm-hmm.
I'm more worried about that than anything else, So I miss trades because of my stubbornness with the news failure thing. But the truth is, I also saved myself from missing a lot of losing trades. So.
Mm-hmm.
And clearly, as I have done this for 20 plus years, what I have found is the trades that I miss more than make up, it's much better for me to do it this way over time than the other way.
Mm-hmm.
Sure, I'll miss a trade here and there, but I will save money over time by waiting for my confirmation. Is what I have found. So that is what I do.
Mm-hmm. Now, kind of related, or I don't know how much they're correlated based on, again, what's happening in England and with their, CPI and, Bank of England stuff, since, Canada has its own banks. Is the Canadian dollar related too much to the British pound?
The pound's been going up for quite a while now, and the Canadian dollar's been going down for quite a while now. So I would argue that there's not much correlation there. The pound bottomed in October and has basically been going up since then.
Mm-hmm. So this is the opposite side. So we see the commercials very long on this,
yes,
and the large speculators more short. Is that right?
That is correct.
Mm-hmm. And so
to get long Canadian, I actually did get long Canadian once. We did have a news failure in that Canadian a while ago. It was back, I'm going to say
well, and maybe we can switch to the chart. I'll go ahead and switch to the chart.
Right here, June 11th.
Okay.
So what happened June 11th?
A nice news failure. I don't remember exactly what it was, but it must have been like a Canadian CPI number that was weak or something along those lines. And so I bought the Canadian versus that day's low because it closed up that day after being down, had this reversal day.
Yep.
And that trade worked for a while, and then it didn't work, and I ended up getting stopped out of that trade last week at some point.
Okay, yeah, we can see it now.
So
you said it was around the 18th?
Yeah, you see that
June 18th?
that reversal day down there? Right there, yeah.
Oh.
So I got long there. I'm long against that low of that day is how I do it. And it worked for a while. And then it stopped working. And I got stopped out. The good part about this was right about where you're a little bit after, a few days later than where you're at now. Right about there, I ended up getting a short signal in the Aussie dollar. And that ended up hedging this very well because the Aussie dollar went down more than the Canadian dollar went.
Mm-hmm.
Neither here nor there. One has nothing to do with the other. It was just kind of luck. But whatever, I got stopped on that Canadian when it went through that low last week, and I'm now looking to get long again. Some would argue yesterday was the day. Certainly after looking at today's move, maybe it was. I didn't get it yesterday, but I'm waiting for some Canadian number to come out that should be bearish the Canadian dollar and have the market not go down, and then I will get long. And sometimes I get that right at the lows, and sometimes I get it off the lows, Either way, my stop is really that 1 day worth of volatility because it's that bad news day. If it takes out that bad news day low, then I get stopped. So
well, and is there any news kind of event that you're looking at on the Canadian side that could kind of set up that news failure event for you?
Yeah, I mean, there's like a number that comes out tomorrow, I know, in Canada. Their manufacturing PMI number comes out tomorrow. I don't know if that's the most important number in the world, but certainly if it were super, super weak and the Canadian didn't go down on it, then I would arguably take the trade.
Okay.
Depending, if it's how other things are trading as well, it might just be a correlation thing. But and then I just go on and I watch these numbers, as they come out in Canada each week. PMIs will come out next week, we'll see how they trade off of that, and I just keep watching these things.
And I guess, that's another question. How important does the news have to be, the event itself, or is it just, again, that reaction? Because there's always data coming out, right? I mean, just in the U.S. market, there's always a CPI report around the corner, a PCI.
No, I prefer it to be a bigger piece of data would be better.
Yeah.
Okay.
I also like to say if it's not totally obvious, then I don't take it. There shouldn't be a question, right?
Yep.
It's kind of, but not really, but it sort of is. I'll walk away,
Yep.
I like it to be super obvious. There's always another trade somewhere down the road. I mean, I might have to wait on this one. I don't know. Employment numbers are always big. There'll be a Canadian employment number, I believe, at the end of next week. I might have to wait on it till then and see how it reacts to that, you know?
Yeah.
Mm-hmm.
Well, it's great. It's great to hear Jason just talking more just matter of fact. Like, look, if it doesn't fit here, we're gonna move on to the next one, right? There's no emotion there. He's just following the plan. He's disciplined, and he's just planning the trade, trading the plan.
Yeah.
And it's
You know,
rare to hear that.
it's easy to say, you
Yeah.
know.
You keep it bottled inside. You don't.
I
show
mean,
it.
missing the top on the British pound pisses me off. Missing the bottom in the Canadian dollar, you know, yesterday.
Exactly.
When it's up a bunch today, it pisses me off. Missing this and that. I missed the yen trade, which has been a monster.
Yeah.
Stuff was set up at the lows on the yen trade. I never got a news failure.
Okay.
So I'm not super pissed off because it wasn't a trade I'm supposed to make.
Yeah.
But at the end of the day, the commitments of traders was set up for the first time all year. It wasn't like it was set up before either.
Yeah.
And that thing's been a freaking monster, you know? And, you know, I don't want to get into it too much, but I manage quite a bit of money and I get paid 30% of what I make. So you start running the numbers through your head and it's like, it freaking hurts, man. You know what I mean? I'm a beat out with that shit. You know what I mean? So, you know, I'm not saying I'm not.
It's good to see you're a human.
I'm not a human being. I am a human being. You know what I mean? But I've been doing this for so long. You know what I mean? I've screwed up so many things, so much worse than missing one trade. Right. I can get over it pretty quickly. It bothers me, but I'm like, I always say to myself, look, man, you've been in a lot worse position than this. So just get over it. Get on with it. You know, I always tell people, like, you know what I do when that happens? I just call my mommy because she pats me on the head and tells me she loves me and I'm a good boy. And, you know, we just get on with it, man. We just get on with it.
It's just that easy, huh?
Your mommy loves you no matter what. You know what I mean?
Right. Phone call away. Well, and so, you know, on the yen, I mean, I know a lot of people were looking at the, you know, the fact that the Bank of Japan, you know, okay, they hiked, right? And it was going from negative rates. So, you know, that certainly kind of fueled something. But so I guess if it goes in the direction you expect, even though it's a turn or maybe like it's, you know, there's just not a trade there for you, right?
There's not a trade there. There was arguably a trade somewhere in there, but I missed it. So, or, you know, in retrospect, you can always make the case, right? But we did have some people I know, like on our Discord, that took the first day the yen bottomed. Okay, there was some intervention, right? And then the second day there was arguably some bearish yen news that came out, and the yen went down and then actually closed up. You probably could have called that day the news failure day. And you'd still be deep in the money on that trade, even from that day. I missed it. And it ain't the first one, and it probably won't be the last one.
Right.
We move on. But it's one good thing about my Discord channel and all that and having these people is I may miss it, but at least they caught it. I'm like, I'm glad someone's making money, man.
Seriously.
And I tell these guys all the time when they're trying to copy trade me, I go, listen, believe me when I tell you this. I know I'm in Market Wizards and blah, blah, blah. You can be better than me, man. You shouldn't be trying to copy trade me. You should be trying to take what I'm showing you and be better than me. You can be better than me, right? That's what I want to see these people do. Be better than me, man.
That's perfect.
That's really what I'd like to see, you know? And some of them I kind of think are doing it. So,
yeah. And I mean, that's gotta be a little rewarding. You know,
it's more than a little rewarding. It's very rewarding. I'm getting down to, you know, 57 soon, and I'm hoping to be done at 60. You know what I mean? So I'm getting down to like, what's going to happen when I'm done doing this? And if I can have passed this along to people and they can make this successful, then I feel like my trading process is still alive. Even if it's not with me, you know, it's with other people, and they've taken these lessons and hopefully expanded on them. So.
And before we kind of leave this yen trade, I just wanted to kind of pop up the chart real quick. And just as a reminder for folks, you know, look, we went through a lot of charts today. And so if you were listening to this, you might want to go back and, you know, watch some of this to look at the chart so you can see, especially what those crowded market charts look like, what some of these, you know, price actions. So again, here's the
and by the way, if they have questions and all that, first of all, I've done something like 200 YouTube videos. They're all
Yeah.
free. You know, you just go right on there. They're free. And I'm not really on there saying this is what S&Ps are going to do next week. That's not the purpose of my YouTube videos, right? The purpose is to explain a lot of this kind of stuff and a lot of the questions that people have had. And I'm able to get these questions from the members of my people, so I know what questions people have. And I've made a lot of YouTube content about that stuff. So if you're having questions like, what the hell is he talking about? And you're interested in it, you can just go right on YouTube. It's all right there for free.
Yeah. And again, you can just kind of look up Crowded Market Report on YouTube and your stuff pops up. And again, there's a wealth of information and very current too. You're putting out videos all the time.
Try to do one a week.
Yeah. So, but yeah, here's the yen trade. And so, yeah, as you said, kind of bottomed on the 11th of July.
Yeah.
And, you know, again, this was a recent move, you know, based on that Bank of Japan action, but it was already kind of going in that direction, you know, prior to that. So
yeah, more than kind of.
Yeah, more than kind of right. So one last look, you know, since we're talking about currencies, I'm just going to throw Bitcoin up here, and I'm going to, you know, go out a little bit. Of course, you know, this had the halvening, it had the Bitcoin ETFs, you know, getting approved, you know, all of these things, and here's what's happened with the price. But was there a trade there?
If you pull up the COT chart for Bitcoin, which I think you have.
Okay, I'll do that real quick. I'll bring down the price. Okay, and just switching real quick. Okay, here's the Bitcoin, your COT.
Okay, so if you look at this, we saw in November. Okay, you see the blue line, the large speculators?
Yeah.
Mm-hmm.
See how short they got in November. That was not at the low, which is what many of my trades do, but that was after there was a Bitcoin hadn't done anything, and then suddenly it jumped up, right? And the speculators sold into that in a big way, right? And if you had bought that when they got super short there, and rode that until they went neutral, which was in about April, right? That was a good trade. And then if you look, all this stuff has now gone neutral. There is no bias long or short since April.
Right.
And you look at what Bitcoin's done since April. It's done nothing.
Mm-hmm.
There's no, in my view, positioning to drive it one way or the other, right? Whereas that jump, you can see it there, right?
So here's kind of, you know, it kind of peaked in March, it looks like, and
right, you look at the jump in November and they shorted massively into that, and you could have been buying off the back of that and rode it until they went neutral, which would have been sort of, you know, at the end of April, would have gone neutral somewhere in there, and then you'd kind of be flat from now. So that would have been a nice little trade too.
So were you looking at any, you know, again, there's been news here, a lot of people looking at, you know, the political situation. Okay, you know, are politicians getting more favorable towards cryptocurrency and Bitcoin? You know, do any of those kind of matter?
We saw them get favorable towards Bitcoin this week with the Trump thing, and look what happened to Bitcoin.
Right.
It went not straight down, but it's gone down a lot. Right. I think the post-Trump thing, it was trading like around 69 and even got as high as 70, right?
Yeah, a little bit over 70.
And I mean, 2 days later, we're back to 65. And again, I will argue that because this doesn't always happen, doesn't always work, right? But the juice to break it out, you know, isn't really there because we don't have the shorts there, right?
Yeah. Again, that lopsided. So again, you just don't have the environment. When you've got neutrality, how do you kind of go contrarian to neutral? That's just still neutral. So
that's right.
Yeah. Hey, Jason, again, it's always a pleasure to get your thoughts on this. I find your stuff really interesting on that contrarian side. I love your videos. I think I like your dispassionate, you know, matter-of-fact way of presenting stuff. Your videos really do show that on your YouTube channel. So I highly encourage people.
I think people make too much, you know, after you've done this for a long time, you know what I mean? I've traded so many markets, right? I started trading, in Asia. I traded all the Asian markets, and I've traded the European markets, and I've traded stocks, and I've traded futures, and you get to a point where it's like not everything is so big news. The market's going to crash or it's going to rip. Like that. Most of the time, that's not what it is. It's just most of the time, it's just another day.
As a reminder, again, these charts are available at investors.com/podcast. So you can, check that out. Also, you can like and subscribe, get us some views, because hey, I don't mind pandering to that. That's fine. But yeah, thanks a lot, Jason, and we'll have you on again. That's great stuff. That's going to wrap it up for us this week. Next week, we're going to have Miss Schneider back on the show from marketgauge.com. I'm actually going to be gone. I'm going to be in Hawaii, dropping my daughter off back to school at the University of Hawaii. So Scott St. Clair is going to be filling in for me, and we hope you enjoy that show. Not too much. I don't want him to do too good a job. That's why I keep Arusha here, to keep things
tabs on Scott.
Yeah. So, thanks so much for watching. We'll see you next week. Bye-bye now.